Hey guys, welcome back to my channel Siri Talks. I'm Siri and today we'll be completing GST, Goods and Services Tax. If you didn't watch the part 1, the link will be in the description box. Today I will be covering composition scheme, input tax credit, e-way bill and solving some problems on GST. Let's go to composition scheme. The compensation scheme is meant for small dealers or manufacturers or service providers with an annual turnover of less than 1.5 crores, and also for restaurant service providers. Under this scheme, the rates of GST are given below in this table. For restaurants or suppliers of food items or drinks which are non-alcoholic, the SGST and CGST rates are 2.5% and the total is 5%. For any other supplier, the SGST and CGST rates are 0.5% and the total is 1%. So, a dealer under competition scheme cannot collect GST as he has to bear the GST for any sale he makes, and cannot claim the input tax credit or ITC on goods and services purchased by him, and has to issue a bill of supply instead of a tax invoice declaring that the composition taxable person not eligible to collect tax on supplies has to display in each place of his business composition taxable person. Let's go to input tax credit ITC. When a dealer sells his goods or services, he charges an output GST from his customer, which he or she has to deposit in the government account. But in running his business, he had paid input GST on the goods for services he had availed. This input GST he utilizes as input tax credit ITC and deposits the excess amount of output GST with the government. Thus, input tax credit ITC is in order to avoid the cascading effect of taxation over taxes. GST payable is equal to output GST minus ITC. Claiming ITC. A dealer registered under GST can claim ITC only if he possesses the tax invoice and he has received the goods and services which he sold and has filed the returns. The tax paid by him has been paid to the government by his supplier. Note that a person registered under a compulsion scheme or in GST cannot claim ITC. Utilization of ITC. The amount of ITC available to any registered dealer shall be utilized to reduce the output tax liability in the sequence shown in the table. Please have a glance in the at the table. Next, let's move on to e-way bill. An e-way bill is an electronic way bill that can be generated on the e-way bill portal. A registered person cannot transport goods whose value exceeds 50,000 in a vehicle with an e-way bill. Let's do some problems on GST. A consumer buys a washing machine from a dealer at a discount of 20% on the marked price of 25,000. If the rate of GST is 18%, calculate the tax and the total amount the consumer has to pay for the washing machine. The marked price is 25,000 and the discount is 20%. The selling price is equal to 25,000 minus 20% of 25,000, which is equal to 5,000. 25,000 minus 5,000 is equal to 20,000. Tax paid by the consumer or GST is equal to 18% of 20,000, which is 36,000. I mean 3,600. Total amount paid by the customer is equal to selling price plus GST is equal to 20,000 plus 3,600, which is equal to 23,600 rupees. Hence solved. Let's go to the next problem. A dealer purchased a television from a manufacturer for 20,000 rupees and sold it to the retailer at a profit of 15% of the GST rate is 18%. Calculate the amount of GST, input CGST and input SGST for the dealer. The amount of GST and has the amount of GST the dealer has to pay or deposit with the government. The amount that the retailer has to pay for the television. The purchase price of the TV is 20,000. Rate of GST is 18%. So CGST rate is 9% and SGST rate is 9%. As CGST and SGST are half of the prescribed GST rate. Input CGST for the dealer is equal to 9% of 20,000, which is 1,800. Same for SGST. Total input GST for the dealer is equal to 18,000 plus 1,800. 1,800 plus 1,800, which is equal to 3,600. Selling price of the TV is equal to 20,000 plus 15% of 20,000, which is equal to 20,000 plus 3,000, which is equal to 23,000. Output GST for the dealer is equal to 18% of 23,000, which is 4,140 rupees. Amount of GST deposited by the dealer is output GST minus input GST, which is 4,140 minus 3,600, which is 540 rupees. The amount the retailer has to pay to the dealer for the TV is 23,000 plus 4,140 rupees, which is 27,140 rupees. Let's move on to the next problem. DM Cars Private Limited in Rajasthan sold three cars worth 5 lakh, 6 lakh, and 10 lakh to Bikaner Automobiles Private Limited in Rajasthan. They incurred packaging charges of 10,000 per car and provided a discount of 15% on account of Navratri festival. Navratri festival. Calculate the rate of GST is 28%. Calculate IGST and CGST and SGST. Cost of cars is equal to 5 lakh plus 6 lakh plus 10 lakh, which is 21 lakh. Packing charges is equal to rupees 10,000 into 3, which is 23,000. Discount is equal to 1% of 21 lakh, which is equal to 21,000. Note that the packing charges or any incidental charges at the time of supply of goods must be included in the transaction value, while the discounts are deducted from the transaction value. IGST is equal to nil since there are no interstate sale. CGST is equal to 14% of rupees 20 lakh 109,000 rupees, which is 29 lakh 5,260 rupees. Same for the CGST. hence solved. Let's move on to the next problem. A retailer purchases an air conditioner for 35,000 from a company. He sold it to a consumer at a profit of 5,000. Calculate the tax liability of the retailer if the GST rate on air conditioner is 28%. So, in this problem, there are two methods. First method is for the retailer, which is purchase price is equal to 35,000 input GST, which is 28% of 35,000, which is equal to 9,800. Input tax credit ITC is equal to 9,800 rupees. Selling price is equal to 35,000 plus 5,000 is equal to 4,000 rupees. 40,000 rupees. Output GST is equal to 28% of 40,000, which is equal to 11,200 rupees. Tax liability output GST minus ITC, which is equal to 11,200 minus 9,800, which is 1 1,400 rupees. The next method is tax liability of the retailer is equal to tax on value addition, i.e., tax on profit, which is 28% of 5,000, which is 1,400 rupees. Hence solved. Next, a jewelry manufacturer in Surat, Gujarat, sold a bracelet to a Rajkot retailer from Gujarat for 80,000. This bracelet was then sold to a dealer in Cuttack, Odisha for 95,000. If the GST rate for gold jewelry is 3%, calculate the net GST payable at Rajkot and the input tax credit for the dealer in Cuttack. For the dealer in Rajkot, the purchase price is equal to 80,000 and input GST is equal to 3% of 80,000, which is 2,400. The input tax credit is 2,400. Selling price is equal to 95,000. Output GST is 3% of 95,000, which is 2,850. The net tax payable at Rajkot output GST minus input ITC is equal to 450 rupees. Next, the input tax credit for the dealer in Cuttack is equal to output GST for the dealer in Rajkot, which is 2,850 rupees. Let's move on to the next question. And this is the last question for the day, by the way. A registered trailer purchased garments worth 25 lakh garments worth 250,000 from a manufacturer in the same state. The value of his supplies in interstate transactions was 30,000. He sold the remaining stock for 260,000 within the state. Find the net IGST, CGST, and SGST payable by him if the GST rate is 12%. The output tax payable at 30,000 in the interstate transition IGST is 30 3,600. The output tax payable at 20 260,000 intrastate transition is 115,600 for CGST and SGST. Same for input tax credit at 20 to 50,000. So the total is 3600, 600 and 600. Hope you enjoyed this session and thank you for watching. Please like, share and subscribe and hit the bell icon for more amazing videos like this one. Bye.